Hi guys, welcome to today's video. Today we're going to be talking about the importance of pattern separation in the forex market. Right? The reason why I make this video is because I've seen people who would analyze using price action, and they would draw trend lines all over the place, and the charts would be messy, right? And the charts would be messy. They wouldn't be clear. For example, if you draw a trend line through a consolidation, and we just made a video not too long ago about the fact that when the market is in a corrective phase, it indicates to you whether the market is going to continue with the trend or is going to go counter trend. So when you draw a trend line right through the corrective phase or the correction at hand, you find yourself not being able to be clear, and you find yourself confused, and you find yourself not being able to trade efficiently. So today we're going to be talking about the importance of pattern separation and how to implement it and how it will help with your trading. Yeah, so let's get straight to it.
Those that made it.
Right, so the first example we're going to start with is EURUSD. We are on the 1 hour chart, and as you can see, if we zoom out, we have a channel right here, right? We have a channel right here, and here's where pattern separation is very important for you, right? So let's imagine the price is still over here. This hasn't happened right here. This downtrend here hasn't happened, right? The market is still over here. I've seen people who would take the trend line, as you can see, and they would drag it right through price, and as you can see, it's a little untidy now. You're not really clear as to what the hell is going on here. The market is moving correctly above the trend line, and it's moving below, and you're not really sure what's going on. But then the moment you separate, you just pull the trend line back, maybe to somewhere here, you start noticing the fact that we have a pattern here. Check this out. We have a pattern here, which is a rising wedge. We have a rising wedge right here. Boom. Just by separating these two, just by separating that, usually the market is much more clearer, right? Rather than having this trend line run through price, and now it's a bit untidy, you're not exactly sure what's going on. But the moment you separate the two, you just drag this one back, or even if you separate the two, just drag it somewhere here, you see more clearly, and you see that this is a high probability trade because of the fact that we are let me remove this real quick. We are, number one, we are in a channel. Number two, we have 3 touch confirmations, right? Let me count them. The first confirmation, the first touch, second touch, the third touch, multi-touch confirmation, and then on the third touch we have this rising wedge, right? We have this rising wedge right here on the third touch of this trend line, which makes it a high probability setup. To make it even worse, even within the setup, we have a 3 touch confirmation, right? We have the first touch, the second touch, the third touch. On the third touch, we have a nameable pattern, which is a high test, and which is confirmed by a bullish candlestick right here. Fantastic entry, fantastic trade. My goodness, These are the kind of trades that would change your life. Fantastic trade. The market then moved on all the way to the low, right? So that's the importance of pattern separation. You have to learn how to separate the patterns within the pattern. Like, you'll find patterns and you must separate the two. Even down here you would find someone who would draw the trend line right through price, just because the market is touching, just to cater for these touches here, 1, 2, 3, and someone would draw their trend line right through consolidation right here, right? But if you learn to just separate it, like so, you will notice that this is an expanding triangle. Check this out. This right here is an expanding triangle. So not only do we have a reversal pattern over here, like so, but we have a continuation pattern over here, right? An opportunity to scale in, and we also have another continuation pattern here. And the funny thing is that this continuation pattern prints out itself. It prints itself out. Hold on. It prints itself out right at the third touch, right at the break of this trend line, and we have a continuation pattern at the break of this trend line. So it's very important for you to understand this, right? It's very important for you to understand how to separate the patterns within patterns, right? So let's move on to the next example. Right, on the second example, we are on NZDUSD, and this is a setup that I entered, right? So as you can see, we have another channel, right? First touch, second touch. On the third touch, something interesting happens, right? We see the market moving impulsively above the trend line, impulsively, and then coming back right into the structure in a very impulsive way, which is a clear rejection of this price, right? And even if you drag the trend line through price, but I wouldn't do that. For the sake of clarity, I would just put it somewhere here so that you may see it clearly, because this is a pattern in which on my previous videos I speak about the reversal patterns that I always go for, and one of them is this one. This is a perfect reversal pattern where the market moves impulsively to the high above a zone or above a certain price, and then comes back into price, right? And then prints out a continuation pattern like this one. This is a very high probability setup in which you cannot miss, right? Now the annoying thing about this one is the fact that I was kicked out. I was kicked out of this trade due to these spikes. The spike over here. I moved when the market moved in profits. I moved my TP, or rather my stop loss, to break even, and I was kicked out by the spike. And yeah, these are the kind of things that happen in the market, but it is what it is. It's fine. But the point is, when separating the price, when separating the trend line from the actual price action, you see patterns much clearer. I personally wouldn't have seen it if I had my trend line like this. I would have assumed that this is a continuation, some sort of manipulation. Man, I don't know what's going on. But the moment I just separate these two, and I'm like, okay, let me wait and see what the market is going to do now that it's moving impulsively above this trend line. I'm not going to buy this one. Let me see what's going to happen. The moment it moved right back in, I was like, okay, let's see what's going to happen. And then they gave us a continuation pattern, which is one of my go-to setups in my trading plan. So let's move on to the next example for further clarity. On the third example, we're on AUDCAD, and as you can see, we have, as we zoom out, we are on the 1 hour chart. We have a triangle here, which is a continuation pattern. But the interesting thing is, within that pattern, we have a trend line that goes something like so. And as your average person would draw the trend line right through price here. And as you can see, it's a bit untidy, it's a bit, confusing. But just by separating the consolidation from the actual price, you may see now that this may be some sort of continuation pattern, a triangle of sorts, right? Here's a triangle. Now the market is moving, impulsing up, consolidating, impulse, consolidation, impulse, correction, impulse, right? You wouldn't have seen this as a continuation pattern if you had your trend line like this. Right? Even if you didn't enter here, but you entered here, it's fine. But then this mess is completely unnecessary. Learn to separate your trend line from current price, so you can see what structure they are trying to build, right? So yeah, let's move on to the next example for further clarity. On NZDCAD, we have a continuation pattern that has been built here. The market has moved. We have, two patterns that are separated here, but this is not the example I want to go for. Let's go on a 1 hour so you can see what I'm talking about, right? So within this pattern here, right, let me remove this. Let me just quickly remove this real quick. Cool. Within this pattern, we have a wedge or a triangle, whatever you may call it, and someone may draw a price, rather a trend line right through this price here, which makes it a mess. Right, it makes it one hell of a mess. You cannot see, it's all choppy, you cannot tell what's going on here. But the moment you separate the two, the key is to separate the two, right? Bring this trend line back, and as you can see, you will see much clearer that this is another continuation pattern to the low. As you can see, boom, this is a continuation pattern. As this larger structure indicates that we are going to the low, this is a further confirmation that we are indeed going to the low, and you may enter at a reduced risk, or you may enter at the third touch here. Either way, it's all good. First touch, second touch, third touch, and you sell all the way down. Let's move on to the next example. On AUDCAD, we have a reversal pattern, right? Where the market, now we come from a descending channel. We have an impulse, correction, impulse, correction, impulse, correction, impulse to the latest high, the previous high, the highest high. And as you can see, we have a zone here, right? We have a zone here. Now someone would draw that zone right through price like this, right through price, imagine. And the market now, when you look at it, it doesn't make sense. It's choppy right at that zone. But the moment you separate the two, right? The moment you separate these two, right, you keep in mind the fact that we are at a previous zone here. We are at the zone, and you keep in mind the fact that the market has touched once, came back, and now the market is coming back, touched once and touched the second time to this price here, the latest high. Not only that, but it printed out a nameable pattern, which is a high test, and confirmed by printing out these bearish candlesticks here. This is a high probability setup, a fantastic double top, in which, as you can see, the market did drop for quite some pips. So yeah, let's move on to the next example. On EURUSD, we are on the 4-hour chart, and as you can see, the market printed a large expanding triangle, right? And then on the third touch, right, on the third touch of the resistance of this pattern right here, the first touch, okay, look, the fourth touch actually, first touch, second touch, third touch, on the fourth touch, the market broke below and came back inside, right? So this may confuse you as you draw it this way, right? It may confuse you as you draw it this way. It keeps breaking it, coming back, breaking it, coming back, breaking it. But if you separate the two, just pull the trend line back, zoom in, and just watch this price action, you will realize that this is a continuation pattern, right? We have a continuation pattern that goes something like this, right? You place your pending orders down here, and you go with the ride. So this is very important when it comes to your pattern separation. You wouldn't have noticed this if you had your trend line running through price. This would have been very confusing. You would have been wondering why the market is very choppy and it's not making sense. But the moment you separate the two, it makes much more sense. Right, so like any other video that I post on my YouTube channel, I hope that a light bulb is going off, and you've been taking notes, and there's some clarity in your mind and in your trading career. So that's the importance of pattern separation and the clarity that provides for you. Otherwise, if you did enjoy this video, hit the like button, subscribe, hit the notification bell so you don't miss any uploads. Thank you very much for watching up to this point. I will see you next time. Peace out.